Hey, what's up, everybody? Well, a couple of days ago, Mr. Jerome Powell, the Fed chairman, spoke, and the markets listened like the markets generally do when the Fed chairman speaks. All the markets, the stock markets, the silver and gold markets, precious metal markets, crypto markets, all the markets listen and react to what Jerome Powell has to say. Well, at that time, when Jerome Powell was speaking, he indicated possibly he is going to slow down the Fed rate hikes. And silver went past $23 per ounce. Gold went past $1,800 per ounce spot price. Today is a different day, and the markets are reacting for a different reason and in the opposite direction. As I'm recording this video on December the 2nd, 2022, silver is currently down 25 cents or down just over 1%. Gold is down $17.50 to $1,786 or down just under 1%. Why are the markets acting like this? Well, because according to this CNBC article that came out just a little while ago, payrolls and wages blow past expectations, flying in the face of the Fed rate hikes. Non-farm payrolls increased 263,000 for the month, while the unemployment rate was 3.7%. The Labor Department reported Friday. The payroll number was well above the estimated 200,000 number, went up 63,000 more than it was expected, while the unemployment rate was in line. Average hourly earnings jumped 0.6% for the month, doubled the estimate, and 5.1% annually versus the 4.6 expectation. So the Fed just a couple of days ago indicated possibly, because none of us really know what the Federal Reserve is going to do when the Federal Reserve meets December 13th and the 14th, until Jerome Powell takes the podium and announces what they are going to do on December the 14th, 2022. Given the news that we've seen today, will Jerome Powell actually slow down the interest rate hikes and only increase by 50 basis points, or will he remain hawkish and increase by 75 basis points? Of course, none of us really know that answer until, like I said, until he takes that podium. According to the CNBC article, job growth was much better than expected in November, despite the Federal Reserve aggressive efforts to slow the labor market and tackle inflation. Non-farm payroll increased 263,000 for the month, while unemployment rate was 3.7%, the Labor Department reported Friday. Economists surveyed by the Dow Jones was looking for an increase of 200,000 on the payroll number and 3.7% for the jobless rate. The monthly gain was slightly decreased from the October's upwardly revised 248,000. The numbers likely will do little to slow a Fed that has been increasing rates steadily this year to bring down inflation, still running near its highest level in more than 40 years. According to this CNBC article, it sounds like their opinion is that the Federal Reserve is not going to slow down the interest rate hikes and possibly will do another 75 basis points. Again, none of us are really going to know that answer until Jerome Powell actually takes that podium on December the 14th, 2022. The article goes on to say, in another blow to the Fed's anti-inflation efforts, average hourly earnings jumped 0.6% for the month, doubled the Dow Jones estimate. Wages were up 5.1% on a year-over-year basis, also well above the 4.6% expectation. The Dow Jones Industrial Average fell more than 200 points after the report, as the hot jobs data could make the Fed more aggressive. Treasury yields jumped after the news, with the 2-year note, the most sensitive to monetary policy, up more than 10 basis points to about 4.36%. To have 263,000 jobs added, even after policy rates have been raised by some 375 basis points, is no joke, said Chief Global Strategist at Principal Asset Management. The labor market is hot, heaping pressure on the Fed to continue raising policy rates. This is talking just the opposite of what Jerome Powell indicated just a couple of days ago, where he may or may not slow down the Fed rate hikes. What do you think? In the comment section below, do you think the Fed is going to slow down the Fed rate hikes, or do you think he is going to stay aggressive for the rest of 2022 and possibly even going into 2023? Leisure and hospitality led the job gains, same as last month. We had a big increase in the job market last month, and it is from the same sector. Leisure and hospitality once again led the job gains, adding 88,000 positions. Other sector gainers included healthcare, adding 45,000 jobs, government adding 42,000 jobs, like as if we need more government jobs, and other services, a category that included personal and laundry services, and which showed a total gain of 24,000. Social assistance saw a rise of 23,000, which the Labor Department said brings the sector back to where it was February 2020 before the COVID pandemic. Very interesting. Construction added 20,000 positions, while information was up 19,000, and manufacturing saw a gain of 14,000. On the downside, retail establishments reported a loss of 30,000 positions heading into what is expected to be a very busy holiday shopping season. Transportation and warehousing also saw a decline, down 15,000. The numbers come as the Fed has raised rates half a dozen times this year, including 4 consecutive 75 basis point rate increases. Despite the moves, job gains have been running strong this year, if a bit lower than a rapid pace of 2021. On a monthly basis, payrolls have been up an average of 392,000 against 562,000 for 2021. Demand for labor continues to outstrip supply, with about 1.7 positions for every available worker. The Fed is tightening monetary policy, but somebody forgot to tell the labor market, said Fitch Ratings chief economist Brian Culpton. The good thing about these numbers, it shows the U.S. economy firmly got back to growth in the second half of the year, but job expansions continuing at this speed will do nothing to ease the labor supply demand imbalance that is worrying the Fed. Let me know what you think in the comment section below. Let me know, what do you think the Federal Reserve is going to do when Jerome Powell speaks on December the 14th, 2022? Is he going to stay hawkish? In my opinion, I think he's going to stay hawkish. I think interest rates are going to go up by another 75 basis points, but that's all speculation. Jerome Powell did indicate a couple of days ago that he may slow down the interest rate hikes, and maybe he only raises interest rates by 50 basis points. Let me know what your opinion, what your thoughts are in the comment section below. Please smash that thumbs up button on the video, like, comment, subscribe, and I'll talk to everybody on my next video. Thanks a lot, everyone.